So the major indices closed mostly unchanged, although NASDAQ did edge up to yet another all-time record close. Now, the big news of the day was that jobs report, this from the Bureau of Labor Statistics. It came in below Wall Street consensus. In fact, we lost 33,000 jobs. It was the first monthly loss of jobs since September 2010. But let's keep in mind, there's no doubt hurricane damage and disruption in two boom states, Florida and Texas, hurt the overall number. But beneath the headline, however, there were some very positive developments. For instance, hourly wages up 2.9% year over year. That's the best number since 2009. The U6 unemployment rate, the real unemployment rate, 8.3% from 8.6%. That's the lowest since June of 2003. Total unemployed, 6.8 million people unemployed. A year ago, it was 7.9 million people. And you know, the labor force is swelling. Last month, 575,000 people joined the labor force. One of my favorite indicators is employment to population ratio. That increased 60.4% from 60.1% month over month, and a record 154.3 million people are working, according to the household survey. So now investors are looking ahead to earnings and the tax drama. Now, by the way, on that note, I talked about this earlier in the show. I'm confused why the GOP cannot articulate the benefits of lower taxes. Now, history shows us lower taxes improve the economy, which in turn results in more money in the government's coffers. Now, I get the notion that less is somehow more. It seems counterintuitive. But in this case, we are talking about folks keeping more of the money that they've earned. So, yeah, Democrats argue lower taxes mean less money to fund our government and the military. And initially, it is true, but only for a short period of time. As more money circulates in society, the government tax coffers begin to swell. I call that a win-win. Exhibit A, the Reagan tax cuts. Now, President Reagan came into office, sky-high corporate and individual tax rates. At the end of his second term, both were substantially lower, and the federal government was taking in substantially more money. Give you an example. Corporate rates declined 6 percentage points during his 2 terms. Revenue to the government increased $107 billion, 37% over that time. The top individual tax rate declined 42 percentage points, resulting in revenue to the government increasing $23 billion, 38%. So the bottom line is less actually turned out to be a whole lot more. By the way, 2 other ways to measure this. The impact on the economy, you look at GDP, you look at jobs. GDP under Ronald Reagan's tax cuts, when they kicked in 1993, GDP surged at 4.6%. The next year, 1984, 7.3%. In that span from 83 to 89, GDP was 4.4% per year. Employment growth with job creation under Ronald Reagan was legendary, highlighted by that September 1983 print. Remember that? 1,150,000 jobs in a single month. That would be an amazing achievement now with 255 million people in the civilian non-institutional population. Back then, there was only 155 million people in the job pool. Oh, by the way, I mentioned that employment population ratio. It soared under Ronald Reagan. When he left office, it was at an all-time high. The jobs picture is fine. The stock market rally is intact. Your next big test now is going to be third quarter earnings. They begin next week with a number of big banks releasing, so you have to watch, but it's going to be exciting.